Welcome to our YouTube channel where we discuss important topics related to tax filing. The objective of this video is to provide key information about the K-1 and how it impacts our taxes. We would like to emphasize the importance of understanding the K-1 to fulfill tax obligations and maximize our benefits. Good afternoon, Fulton. Thank you
Good
very much
afternoon.
for being here. We will start with the Q&A. First question is, what is a K-1?
Okay. A K-1 is a tax form that is created or is generated from the tax return of an LLC or an S corporation. So there are only two entity types that are able to create a K-1. One is the limited liability company, but this LLC should be two or more members. One member LLC will not create a K-1. Will not. Only LLCs with two or more members. Same thing for a limited partnership. They're similar. It will be the same thing. And the other type of company is a corporation type S, or what is called an S corporation. Those two entity types are the ones able, or the only ones that are able to create a K-1. And this K-1 is a document, it's a tax form. There is one of the forms from the entire tax return. The tax return uses a number of forms to report to the IRS. So the information of the income and expenses in the yearly basis that we do with the accounting is transferred to the tax return, and this tax return is filed with the IRS. It's e-filed with the IRS. Within that tax return from an LLC or an S corporation that is filed from January 25th till March 15, or if there's an extension, up to September 15, within that tax report, there is Form K-1. And this Form K-1 is the one that reflects the net profits of the company assigned to each owner based on the percentage of ownership that person owns in the company. So it's a form that reports the gains, and in this case will not be the profits from the company, the LLC or the S corporation, based on the percentage of each of the owners of the company.
Understood. Second question, what is the difference between a K-1 and a 1099?
The K-1 is basically a form that comes from a corporation, S corporation, or an LLC. And as I said before, this form is given to the IRS to inform of the activity of the LLC and the S corporation. And the reason that the K-1 is given to the owner of the company is because the LLC and the S corporation do not pay taxes. S corporations and LLCs do not pay tax. LLC of two members or more, they do not pay taxes. And because they do not pay taxes, the company, by filing the tax return, will tell the IRS, we are not paying you taxes, but our owners will do for us or for the company. And because of that, because of the non-payment of taxes from S corporation and LLC, the K-1 is born. Is given to the taxpayer, to the owner or to the owners of the company, and it is the taxpayer who is going to pay taxes at the personal level. The 1099 is a form that is not similar to the K-1. The 1099 is just a form where a vendor or a professional or someone who does a job for the S corporation or the LLC receives at the end of the year for the amount of money that was paid to them. This could be, for example, an attorney that is doing legal work for the company. It could be a CPA that is doing accounting and tax work for the company. This could be for a engineer. This could be for an architect that is doing activities, is giving services to the real estate company. The company will provide them, if they don't have a corporation, or even if sometimes, even if they have the LLC or the S corporation, to be safe, they will provide a 1099 to that company that is a professional entity, or to the professional themselves. In that case, the professional will take the 1099 and will file a tax return for that amount. The objective is that with the 1099, I am able, as a company, when I pay to the professional, when I pay to other company and I want to give them a 1099, with that 1099, I am able to deduct the expense, and I have proof that that deduction, that money, has been given to someone else, and that person is obligated to pay taxes. So the K1 and the 1099 are justification before the IRS. The K1 is a justification for the company, for the S corporation or for the LLC, for the non-payment of taxes, and the 1099 is a justification of a company or a company that pays to an individual or a professional is to inform to the IRS that I am able, or I'm going to take deduction for the payment to that professional, but that professional will have to report to you, to the IRS, because of the 1099 form. So who usually receive a 1099? Usually are individuals that work by themselves. It's called self-employed individuals. If for example, there is a cleaning person and that person works by themselves, you are supposed to give them a 1099. Many times that doesn't happen. And this 1099 is only after $600 that you should give to the person. Before or lower than $600, there is no 1099. But after that, yes. So they are two different forms, two different objectives, but at the end, at the level of the company, at the personal level, the objective is the same. For the person who received the K1 or who received the 1099, the objective is the same. The payment of taxes, because the company who is providing the forms, in the case of the LLC and S corporation, is not paying taxes. In the case of the 1099, the other person is taking a deduction for that.
Thank you for clearing that up. Who needs a K1?
The K1 needs, it's a need for every partner of the LLC when the LLC has two or more members, and every shareholder from an S corporation. It's an obligation that the company should give them up to March 15 if there is no extensions, or up to September 15 if there is an extension.
What is the process of creating a K1?
Basically, the process starts the moment that there is a activity in the company.
Mm-hmm.
For example, individuals who don't have activity in a business, don't have an investment, they are not partners, they are not shareholders, they will not receive a K1. K1 is only, as I said before, for shareholders of S corporations and partners of an LLC company. But so they will not be part of the process of the creation of the K1, and they will not receive a K1. But the thing is, they are going to the company needs to organize the books, the transactions, create financial statements. Those financial statements transfer the information to the tax return, and within that tax return will be given the K1. Whoever has invested in the company and owns a percentage, even if it is 1% of ownership of the company, that person needs a K1. The company, the LLC or the S corporation, will need to give them a K1 for them to discharge the not payment of taxes. As the company, those companies, LLCs and S corporations, do not pay taxes. So because they do not pay taxes, they discharge the non-payment of taxes by giving a K1 to the owners, and the owners, they are the ones doing the payment of the taxes. So the need for giving a K1 is first for the companies, and when the owners of the company receive the K1, they have the need to report this to the IRS and pay taxes for that income that they receive, for those profits that they receive.
Understood. How would a K1 affect my personal taxes?
It's basically by increasing the amount of taxes that the taxpayer pays. Just to give you an example, if the taxpayer is employed and he receives a salary of $50,000, and the K1 comes with $20,000, $30,000 of income, the total income or the full income of the taxpayer will be $80,000. So instead of paying taxes over 50, I am going to pay, or the taxpayer will pay taxes over $80,000. Now, it is not that the $80,000 are at 35%. Here in the US, we pay taxes, it's by ranges. So the more income we have, the more taxes we pay. To pay 35%, 37%, the income should be for over $400,000 to pay 37%, just to give you an idea. So it is not 37%, that is the maximum tax rate. At the level of $50,000, $80,000, the level could be between 22 and 25% of taxes. It starts with a 10%, let's go to 12%, then 22, and then 25%, depending on the level of the income. Depending on the rest of the income that you have, for example, if the K1 is the only income that you receive, then your rate will not be something to considering, or something in consideration, unless the company that provides you the K1 shows or reports a high profit. This could be any type of business that is giving a K1 with a high profit. This is, for example, real estate. With the operation, we have a client, for example, that there's a large operation of real estate, and all these real estate companies, they provide profits, and all these profits flow to a single report. And because of that because of many K1s coming to one single report, personal report, there is a considerable amount of taxes to pay. But in general, the way that the K1 affects your personal taxes is basically the addition of income that you have in your tax return with the other income. This addition is with the rest of the income that you might receive if you are an employee, for example.
Great. Next question is, what is a K1 for a trust?
That is similar to a trust. Is an separate entity that is created when I want to transfer, or the taxpayer want to transfer their assets to the name of the trust. The basic objective there is that I want to pay less taxes. That's why I transfer the title of the assets to the trust. In that sense, if these assets are producing income, like properties, like real estate properties, it will be the trust the one paying taxes, and I will not pay taxes anymore. One thing is that the trust tax is very high; it's 35%. So, and there is no escalation. Then there is no ranges that they go 10%, 22, no, 35% flat. Is more expensive. Now, anyone receiving money or benefit from a trust, or pays a benefit to a taxpayer, the K1 is going, the trust is going to provide a form similar to the K1 to verify that the trust has been given that benefit, giving that money to the beneficiary, and therefore the beneficiary is going to pay taxes for that.
And for our last question, what happens if I don't file my K1?
Oh, no, 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 no.
Mhm.
There's no way to hide because, as I explained before, the K1 goes with the report from the limited liability company, from the S corporation, from the trust, or even from the limited partnership, goes to the IRS. These companies, these entities are obligated to file a report with the IRS, including the K1. So if the K1, if if the K1 is filed with the IRS with the report of all these of each one of these entities, when you do your filing and you forget willingly or not willingly to report the K1, after 3 or 4 months, the IRS is going to send you a letter. And that letter is going to say, you didn't report the K1, or this can even work with a 1099. Could be on a K1, it could be a 1099 that you receive a K1, you receive a 1099, and you forget to report. The IRS is going to send you a letter saying, you owe this money because you didn't include your K1, and it's going to tell you what K1 is, who is the one reporting, because all that information is with the IRS. So it's better not to forget to file a K1. If you have any doubt, for example, of a K1 or a 1099 that you are missing, you can call the IRS. We'll provide the number here. Well, you can call the IRS and ask for transcripts or something that is called wage and income transfer. You request a wage and income transfers, and there you will have every single form that has been filed with the IRS, and you can do your tax return with that. Any good accountant or CPA will be able to file a tax return with that. We have clients that they have not filed for they don't have the forms completed, and they request that form. It's a wage and income transfer, and then we provide tax returns with that. That will be the ultimate result or source for the provision of the information or tax information for you.
Understood. Thank you very much, Fulton, for answering our questions. Now we would like to invite viewers to leave questions or comments and provide contact so we can answer further questions. Thank you very much.
Thank you.